All right, welcome to Talkin Investing. I am Tom, and as always, this is not financial advice. Today, I want to look at the debt of all the Bitcoin mining companies. We just had a major event with CORZ Scientific yesterday, and the number one question I'm getting by far is, which one's the next company that could be in trouble? Who's next to go out of business? So I have a lot of different ways that I look at this. I want to start with this chart. I will do a bunch of other videos over the weekend on this topic because I think it's that important. But the first one I want to do is take a look at each company's debt, because you're going to see that this was a gigantic red flag in the case of CORZ Scientific. So no one indicator alone gives you an answer to this question. So I have a lot of other data I've put together that I want to look at. Again, like I said, this weekend I'm going to go through all of those. So if you're new to the channel, please remember to subscribe and hit the notification bell so you don't miss any of those videos. Also, if everybody could please smash the like button, I would appreciate it. It helps the channel out a lot. Lastly, if you want to join and become a member of the channel, you can hit the join button on YouTube. Members get some member-only content when we do once a week a members-only live stream where we pick a stock for me to do a deep dive on. If you don't see a join button, then you can just hit the link below. Okay, let's talk about the Bitcoin miners. I'm just going to start out real quick looking at the Bitcoin chart. As always, there was an orange line where Bitcoin was when the equity markets closed yesterday. You'll see immediately after the equity markets closed, we had two big red 15-minute candles. This is on the 15-minute time frame. Amazon reported earnings. They were a disappointment, and Bitcoin took an immediate hit on that. Fortunately, about 45 minutes later, Apple reported earnings, and that seemed to stabilize things. And you can see we never really had a big move to the downside. And as of right now, and it's the middle of the trading day still, we're basically exactly on this orange line, which means we're right back to where we were when the market closed yesterday. So we'll see where we end up on the day. But to me, this shows some pretty strong support for Bitcoin. So I continue to think we're going to head towards a relief rally. However, that is not the topic of this video. This is what is leading me to do this analysis and the several other ones that I'm going to do over the weekend. Ultimately, I will put a list together probably by Monday of the 5 companies that I think are in the biggest danger of potentially having to file bankruptcy or do a massive reorganization. I will tell you, I think this sector is a little bit healthier than people think. The stocks are very unhealthy, but the balance sheets are a little bit better than people think. Having said that, there are some red flags out there, so I want to look at this every which way we can and identify all the red flags so that we know what we're dealing with. So obviously we're looking at CORZ Scientific right now. This is what started everybody off. Yesterday, CORZ Scientific was down 78% on the day. It was already very near its all-time low. It went down another 78% from there, and it's now down another 14% today. This is now a penny stock. It's trading at just under 19 cents. This was a $15 stock not too long ago, within the last 52 weeks. So obviously they are now down 99%. So this is priced to go out of business, and that's essentially because they put out a press release saying that it looks like they might go out of business. So if you want more details on that, I did do a very deep dive on what they're doing and exactly what press release they put out and what they filed with the SEC. Staying in business is all about liquidity. So obviously one of the things that can eat away at your liquidity is if you have large amounts of debt, you have to service that debt. In other words, pay interest on it. So debt is structured typically so that there's principal pay downs over time as well. So that's another hit on cash flow. So as you're doing your due diligence, you got to really assess liquidity overall. So I will be sharing a lot of my due diligence with you guys over the weekend. So the first thing I want to say before I go to the chart is all of the Bitcoin miners are a high-risk investment. They're highly volatile, so in my opinion, they are high risk. This is not financial advice. I can't tell you guys to buy these stocks or sell these stocks. But what I can say is that I believe, just due to the nature of Bitcoin and the nature of these companies and the fact that this is early stage, small cap, high growth, they require a lot of capital. It's a capital intensive business. So to me, I start under the premise that all of these, even the best of them, they are risky investments. Inside of that framework of being a risky investment, I then put them on a spectrum of low, medium, and high. So in other words, as a risky investment, do they tend more towards the low side of that high risk, or do they tend more towards the high side of that high risk, which makes them, ultra high risk investments? Okay, let's go to the first chart. Okay, so this is the first of 2 charts I want to show you. This one is long-term debt by company. This is as of the June 30th financial statement for each one of these companies. So these numbers are in millions. So CORZ Scientific, you'll see 852 million. So here's the first red flag right away. $852 million of debt is the most out of all of the Bitcoin mining companies. But I'm putting put it even a different way. If you take Marathon out of the equation, CORZ Scientific has more debt than all the rest of the Bitcoin mining companies all added up put together. So that's how concentrated that risk is. And I'm going to talk about Marathon because they also have an enormous amount of debt. Those two are far and away the highest debt companies. Marathon, fortunately for them, structured their debt in a significantly different way. It's convertible debt. They pay 1% interest. So again, going to liquidity, Marathon's paying 1% interest. So that is a very low carry cost for such a large amount of money. And these don't come due really until 2026. So they're not having to pay back principal for the most part. They're paying 1% interest. So this is still a red flag. I'm not saying ignore it. However, the mitigating factor is it is structured extremely well. Marathon does have, in my opinion, a very strong balance sheet. So like I said, this is one piece of the puzzle. This is not going to give you all the answers, but what we look for as I look at each one of these charts, and this is why I make so many different charts, I'm just looking for red flags in either direction, good news or bad news. I'm looking for stuff to pop out so that I can dig into it and see, is there an opportunity there, or is there something I need to avoid? So right here, right away, this chart screams that CORZ Scientific has a lot of debt. There's really only a few Bitcoin miners that actually have any significant debt at all. So I know a lot of people are panicking and they think, all these companies are going out of business. And obviously, if Bitcoin maintains a bear market for a year or years, that could be true. And there are some that are in more immediate danger than others. But my first takeaway from this was a lot of these companies are very low debt and their liquidity situation is not an imminent threat. However, by the time we're done, we're going to look at a few that I am starting to worry about. So you can see Gree has $111 million of debt. Wolf has $85 million worth of debt. Argo Blockchain has $73 million. Iris Energy has $48 million, and it gets really small from there. Bitfarms has $26 million. Cleanspark has $13 million. DigiHost has $1 million. Riot, Cypher, Any, and Bit Digital have no long-term debt. That doesn't mean they don't have any liabilities. They just don't have any long-term debt with the bank or any bonds or anything like that. So this is a chart, obviously, the lower the number on this chart, the better. And that's why a lot of people were surprised that my top 5 list of companies most likely to survive. But when you see Bit Digital with 0 long-term debt, when you see Riot with 0 long-term debt, that gives me a lot of confidence that they're going to survive. Now, as to whether they thrive and succeed over the long term, that's a different question, but they are set up with liquidity to survive a long bear market if that's what happens. Okay, so this is the debt to equity ratio. This compares a company's equity, and again, I used everybody's June 30th, 2022 balance sheet for this, so I compared their equity to their debt. Theoretically, a company should have a lot more equity than they do debt. The closer that ratio gets to 1, the worse. When it gets above 1, if they have more debt than equity, then that is a red flag. That alone is not enough to condemn a business. But to me, it's a red flag where if I see that, I need to go prove why that's not a problem. And there are reasons why it could be okay. But again, we're looking for outliers. We're looking for red flags. We're looking for any signal that lets us know what might be coming. CORZ Scientific has twice as much long-term debt as it has equity. So there's only 2 other on this list that are even close to 1-to-1. They're 2-to-1, so that's a very bad debt to equity ratio. So this was a gigantic red flag. So if we look at the rest of the list, there's some other of these that have concerning numbers. So you'll see Marathon is 1.11, so they're over 1-to-1. We did talk a little bit about their debt. The good news for them is their debt is structured in an excellent way, very low interest rate. Most of the principal is not due for several years. So it is still definitely a concern, but there's some major mitigating factors right there, and there's a bunch more when you look on the balance sheet, and I will talk about those in some of my videos this weekend. Okay, the next one on the list is Greenidge. They have a 1-to-1 debt to equity ratio. So that means they have as much debt as they do equity. So for a company at this stage, a 1-to-1 ratio is pretty concerning. So that's one where I would definitely, for me, I personally, that's a red flag, and I would want to look more into what they are doing and why I would feel okay with that 1-to-1 ratio. TeraWulf has a 0.63-to-1 ratio. So their debt is 63% of their equity. That's a number I would want to follow up on. Argo Blockchain is 0.44. That's also a number I would want to follow up on. It's less than a half, so not a disaster. But again, those are at the bottom of the list. So those are the ones that, to me, I would at least take a second look at and say, what's going on with these companies? What's going on with their debt? What's going on with their liquidity? The next two companies I just want to point out. These are interesting cases. Mawson, stock ticker MIGI, and Stronghold, SDIG. I did take the numbers from their June statements, and you'll notice they're almost the same, 0.19 and 0.2. So these on themselves did not look like a red flag. These two companies were in imminent disaster. So that's why you have to look at more than one indicator. This indicator alone right here did not red flag these. These looked okay at 0.2. Subsequent to their June 30th financial statements, they have both almost completely restructured their entire companies. So these numbers are not as relevant, but it is interesting to see that these two companies were in imminent danger. They had to take monumental steps to restructure their business in order to avoid going out of business, and they would not have popped up on this chart at all. So that is why you really have to do your full due diligence. So we trail off from 0.08 all the way down to 0. So Riot, Cypher, Any, and BitDigital have no debt, so obviously their ratio is a 0. DigiHost is almost 0. CleanSpark is very near to 0. HUT is 0.04, that's very near to 0. Even Hive and Bitfarms at 7% and 8%, those are very near to 0. So from this one indicator, these companies look extremely healthy. Now, some are more healthy than others, and that's why we're going to look at so many other variables. But all of these companies where you see these lower numbers, that means that essentially they chose to raise money through equity in the early stages more so than debt. Okay, so that's a look at my debt for all the Bitcoin mining companies that I follow. I will follow up with a bunch of other indicators this weekend that help me try to determine which companies are potentially in trouble or in danger of going out of business. Remember, these are all high risk, high reward companies, so you really can't avoid that no matter which one you're participating in. So please invest carefully. So that's all I got for today. Thanks so much for watching, and we will see you in the next video. Please remember to subscribe to the channel and smash the like button.